Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over and do our daily technical analysis update of commodities. We'll take a look at the dollar, yields, precious metals, and the commodities and ETFs, at least the ones that I follow. I'll give you my financial opinions around all this. And if you guys need any help with anything, definitely check out finding-value.com. I go over a lot of stocks. Sometimes I talk about the portfolio that I've set up for this next bull market in commodities that we are in and that we are having a pullback in for wave 2. So let's dive in here. We've got the DXY relative strength indicator of the dollar heading higher today, and that is generally tied with interest rates and the monetary tightness that interest rates come about against different currencies. So if the dollar has stronger yields backing the dollar, then generally the dollar goes up. If the monetary conditions are looser on the dollar, then the dollar goes lower. So what you'll see is the dollar and interest rates pretty tightly correlated to some extent. So we've got the 10 years. So the dollar's higher about 0.5%. The 10 years heading higher. It's getting a little bit of a bounce today. Up 3.9%, which is actually a pretty strong move in yields. Backing out a little bit, is this a pattern that's going to continue higher, or are we going to roll over and come back lower? Now, I don't have that answer for you. We're going to find out here the next couple of weeks and see where yields go. This has very strong correlations to how assets are being priced in the world. If we see this go down, that is a tailwind for stocks to a certain point, but it's definitely a tailwind to precious metals. When yields fall, precious metals, because of the fear in the markets, people are running to bonds because of fear in the markets, and we're looking and gauging the interest. Now, if we get strong jobs report like we had, this can go in the opposite direction. We can also go higher, meaning that the economy is not as weak as we thought, and that perhaps we have stronger oil demand, and oil is a driver of inflation, which would lead to higher interest rates. It is not as simple as what I've just described. There's a lot more complexities than just that. But overall, we had an increasing yield today, which is positive for, say, something like oil, and oil might be influencing the interest rate going up. Same with the jobs reports and stuff like that. The 30-year yield also moving higher. We're right at this kind of support level. Are we going to break down, or are we going to hold and move on up? Again, we're going to find that out over the next few weeks. There's strong implications for either direction. Down, certain assets go up. If yields go higher, other assets will go up. So highly depends on where yields go, and that is a pricing mechanism of different sectors. TLT, this is bond prices falling back down. So we're right at this resistance level. We came up a little bit above it. Is this a false breakout where we slingshot lower? It could be. Maybe it's not. We have to wait and see this next few weeks to see which direction bond prices will go, and conversely, which direction yields will go. They're both connected. The TYX-TNX ratio is falling, but on a longer term viewpoint, we've had a downtrend break, and it does look like it's potentially bottoming. Now, we have to see it actually follow through and move higher. So the TYX-TNX, it was real strong here, and that's when gold prices took off, but we're getting a little bit of a move lower in the short term. So again, if this ratio goes higher, I think gold and silver will vastly outperform, just like it did here. If this comes and it basically is false breakout and we head lower, I think oil is going to take off. That's what I think. Oil, natural gas, and energy in general. The 2-year yield was up today, 0.5%. Now, if we take a little bit longer, big picture view of this. So this is a longer term view of the 2-year yield. And yields are very important to understand because this is basically what prices assets. This prices stocks and bonds higher. This prices stock and bonds lower. And what we're seeing here is we've got a clear breakout, downtrend line breakout there. We zoom in, and are we getting a short-term kind of movement where we get a shoulder, head, shoulder that develops, and we come back down to this level there, which is a high possibility of occurring. That would coincide with fear in the market. That would coincide with higher gold and silver prices. But short term, at least today, we were stronger on yields. And are we going to move up on yields in the short term for a little bit to create another shoulder? It's possible. It is possible. Looking at the CRB index still looks fine. We've got these two small little down days, but that's just generally a continuation pattern to the upside. More buying pressure than there is selling pressure, and this could be a false breakout, potentially. CRB to S&P 500, we are slightly lower, but it's just moving sideways. Looks like we're trying to put in some sort of bottom here, and maybe commodities gets a fire lit underneath it. We start to move on higher. A little double top. We're coming on back. This kind of looks like, some sort of ending type period here in a three-wave down move, and maybe we can fire it up to the upside. Gold lower. We had a stronger dollar, stronger yields. Gold does not like either one of those, but it still looks really good from the position that we look. We've got a massive up candlestick and 1, 2, 3, 4 smaller candlesticks to get back to the base of where we were. That to me screams like we want to go higher. For that to happen, I think that we're going to see yields drop for that to happen. We're also sitting on a massive flag pattern that is broken to the upside, and all of these candlesticks looks positive on this side over here. None of them look like the reversal candlesticks. It doesn't look like it's topping out. We're not throwing, gigantic wicks at the top or anything like that. It looks really strong from a candlestick perspective, especially from the weeklies here. We've got large candlesticks, small selling pressure, large candlesticks, small selling pressure. So we've got that formula or that mix where we could head and push on higher. So that still looks good. Silver also exhibits those same characteristics in the candlesticks. It's a stair-stepping pattern of big green candlesticks, no selling pressure. So that looks like it's going to continue higher. Again, that makes me think that yields are going to drop if people are positioning in precious metals like they are. Platinum still looking very strong. Maybe not as strong as gold and silver, but still looks very strong. This is more of an inflationary metal, and it has a really good setup on a longer term time perspective for absolute domination at some point. XAU to gold ratio, another indication that I think that we could see outperformance of gold and silver mining companies and precious metals themselves, is that this ratio is being very resilient when we have a sell-off in gold. If this was a top, we would see this want to drop quite easily. But this is staying here. People are accumulating gold and silver mining stocks, thinking that the breakout in gold and silver is legit and that we're going to go higher. That is the viewpoint that I hold. That is the viewpoint that the market holds at this time. So I do think that gold and silver mining companies could do incredible things if we can get a little bit of a breakout of this downtrend line for the happiness to occur for the gold and silver mining companies for a big old move to the upside. I'm hoping that's the case. We haven't broken it yet, but things look very positive across the board in the gold and silver mining companies themselves, how it's holding up in down movements, and the characteristics of the candlesticks of up days versus the down days in gold, silver, and all the precious metals arena. GDX, yeah, we were down today, but we were basically down just a little bit more than gold itself. But remember, these are leverage plays to gold. This here still looks very bullish because we've got large, big buying pressure candlesticks, and the selling pressure just isn't there. There's no reversal candlesticks. It's not selling off. It looks pretty resilient in the face of weakness of gold. So this looks really good, I think, for a move higher. SILJ is also behaving very well on down days. It's acting very strong, very resilient to price moves to the downside. So that's also looking good. We're right at this kind of resistance area going across. We've broken this downtrend line to the upside. Maybe we drop and hit before heading higher. I'm not too worried about the path because I'm not worried about the short term. I'm looking more at the market conditions. I'm looking at those yields and how the yields are interacting with each other, which makes me bullish on gold, silver, and the mining companies themselves. Crude oil down 1%. I still think this looks good. I mean, we popped higher. We could come back and fill this gap, so to speak, do a retest before moving on up. But the companies themselves are behaving quite well today. Even though we had a down day in oil, I know we had a massive up move in natural gas, but we're still holding on here. It still looks okay. Natural gas looking very good, up 8% with a nice big bullish engulfing. This definitely looks like it wants to go higher in the short term for natural gas. XOP, yeah, you know me, hitting up 2.15%. Now, is this going to rocket higher, or are we going to reverse and head lower? It's still, we could still head lower here. It's still on the table. And the reason I say that is if we back out, we do have that bearish engulfing that we have right there. If we back out, we've basically been trending in an uptrend if it wants to show up. Here's our uptrend line. And you can see that we've fallen below it, and it looks like it's struggling to move higher here. This is also, if this is the case, you can see these large selling pressure weeks here, and you can see we had more days to come up within it. It could roll over, head lower, and create this other shoulder on a longer term basis. It's a shoulder, head, shoulder of an inverted head and shoulders on a massive pattern, which if we get down here at $100, this is going to be one heck of a buying opportunity where we're going to launch out of this thing and go up to $300 or more. So that is still possible. How could that happen? If the interest rates are moving favorable for gold and silver, it means that fear could be in the markets. People are running to bonds, and that something in the system is out there to scare people. And maybe that's something legit. I don't know what that thing is yet. We don't know what it is, but people are seeing it, whomever it is, insiders, and they're positioning accordingly. But we do have some selling pressure on this side. You can see the bearish candlestick there of a bearish engulfing, and there's no response on the buy side yet. So there's still strong selling pressure, and the yields are positioning themselves for a potential drop at some point. So I am thinking that we could see a potential drop in the short to medium term, which is going to drive gold higher, and it's going to pull these guys back to create a shoulder for XOP. OIH has got the same type of setup. You can see these red candlesticks popping up all over the place. And the green candlesticks are not as big. They're more muted. There isn't as much of a punch to move up, which makes me think we could see a little bit more downside at some point here in the future where gold, silver take off to the upside, and that we see a little bit of a downward move in the energy sectors. Sprout Physical Uranium Trust. Again, we're still getting these selling pressure moves over here. Big down candlesticks. I mean, there are some buying candlesticks through here. And I'm looking at the buying to selling pressure ratio is what I'll call it. I'd have to see a lot of strong selling pressure to break out of here for me to be convinced that we're moving higher. In the short term, I still think there's some downside selling pressure left in this. But it's pretty evenly matched down here. So we'll see which direction this thing goes. Uranium also going back and forth, trading between the buyers and sellers here, all through here. We've got strong selling pressure through this move here. It basically knocked lower. Then you can see we had a buying pressure move and a selling pressure move, which are kind of equally weighted. This looks pretty equally weighted in this area of buying and selling pressure. I can't tell you which direction this thing's going to end up going. I think it's moving with oil, and I don't know if oil is going to break higher or lower here. I think there's still some uncertainties in the market that are forcing these kind of this dichotomy of buying and selling and the pressures and all that stuff. So that's what I see. And right now, I don't know which direction it's necessarily going to go. I think it's two forces opposing each other, battling it back and forth. Tan's got some strong selling pressure here. That looks like it wants to go higher. It's a bullish engulfing candlestick. It's coming right to the tip too, where we could see a resolution here. And it does look like in the short term, we could move on higher. COPX moving sideways. I also use this as a gauge to see we'll call it the economic health of the world. And copper is holding up very resilient here. It's been very resilient. It's reluctant to move down. It actually looks really good for a move higher. So that looks good. Lithium up today, 1.66%, getting a little bit of buying pressure here right above or right below that resistance line. REMX also moving sideways, a nice little bullish engulfing. That does look like it could go higher in the short term. We'll see if it can break that resistance line. The S&P 500, it's still being very resilient here. We back out, kind of zoom in here, and are we going to break this to the upside? Is this a shoulder, head, shoulder that's developed that we could break and move to the upside and get towards this upper end? Could we see an everything rally? It's possible that the S&P oil rallies, gold rallies, kind of everything rallies. Maybe money printing is the driver of it. I don't know, but this doesn't look horrible because we put in a low here and the lows keep coming up. So it still looks strong at this moment. The NASDAQ also basically flat today, being very resilient in the face of increasing yields and an increasing dollar. So I still think this looks good to move higher. It still looks good. Emerging markets moving sideways still looks fantastic in my perspective, and we could see a move higher in emerging markets. XHB is throwing a nice big bullish engulfing right on support. That looks like it wants to go higher. Still looking very resilient in the face of higher yields and a higher dollar. So that still looks very much good on a shorter term time frame. We've got MOO. MOO is the agribusiness ETF. You can see this thing has broken down, but the buyers keep coming in and buying this thing up. So on the short term, we have a bullish engulfing, which looks like it wants to go higher. A lot of uncertainty, lots of selling pressure here with the fear in the market, more selling pressure here. It looks like today we got the buying pressure that wants to go higher. So we're battling back and forth in a lot of these different sectors between buying pressure and selling pressure at this moment. We are sitting below this resistance line where maybe this is just a retest and we actually head lower on an intermediate term. So lots of conflicting data on different time frames. Copper slightly lower, down 0.5%, but we saw COPX was basically flat. So even though copper was lower today, the underlying ETF and the companies were quite resilient, which shows strength, not weakness. We've got lumber moving sideways. That's on a big long-term support level down here. If it wants to show up, there's that big long support level from the 90s. We've got iron ore just moving sideways. This does look like we could still continue to head a little bit lower in the short term. Nickel heading a little bit lower. Again, this could be a double top, but we'll see. Aluminum moving sideways. We've basically just been grinding here. This is a inverted head and shoulders, a little breakout, and then we're coming on back with the fear in the market, the banking problems and all that. Baltic Dry Index heading higher. This actually looks pretty strong to continue on up for the Baltic Dry Index. Newcastle Coal Futures down 2.15%. It's trying to find a bottom here at some point in this general vicinity. Lots of selling pressure, lots of momentum to the downside there, so it's going to take some time. And then Ethereum continuing higher, 1.3%. Still looks resilient, and Bitcoin up 2.8% with a little breakout here of this pattern. That looks like it's ready to go higher. We also have the inverted head and shoulders on a little bit longer time frame for Bitcoin, so that does look good for a continued move higher. Shoulder, head, shoulder, and then the breakout. Big old breakout, and that does look like it's going to continue higher. That is generally a form of liquidity in the system. So more liquidity in the system means higher prices. That's also might be supporting the view of gold and an everything rally. So we've got conflicting data on some, on different time frames on some sectors. Copper, where are we going to go? Oil, we're going to go higher, go lower. Are yields going higher or yields going lower? I think the markets are trying to figure that all out right now. And I can tell you, it's hard to read some of these charts. I mean, Bitcoin looks like it's ready to go higher. If Bitcoin's going higher, it makes me think that there's liquidity entering the system. That is inflationary. Means that oil could move on up, and maybe some of these guys who think there's going to be a demand destruction event that's more deflationary type of an environment, maybe they're wrong, maybe they're not. Because sometimes this liquidity coming into the market takes time to work its way through the system. So we're kind of at an indecision point. I think the markets are trying to figure it all out. Or maybe I'm just trying to figure it all out in the short term here to see which direction we're going to clearly go. I think oil above 82 is a good thing for oil. That's definitely looks good. Natural gas looks like it's ready to go higher, in my opinion there. Nice big bullish engulfing. We're seeing bullish engulfings across different sectors at this time. That's bullish. That means higher prices. But again, we'll see what happens. I think this next couple of weeks will give us a more clear direction on exactly where things are going in the short term. I'm still playing the long-term move higher in commodities, and I think that's eventually where they're going to end up. But short term, yeah, we'll find out here in the next couple of weeks which direction it chooses to go. All right, guys, that's what we've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like these types of analysis. I've got a bunch of different analysis on individual companies to give you ideas on how I'm positioning for the coming bull market. All right, guys, we'll catch you later. This is Finding Value.